Let us discuss on allocating capital and corporate strategy in the context of commercial organizations engaged in manufacturing products or rendering services. Growth is life for every company, which is made possible through incurring capital expenditure for expansion, modernization, or diversification. Value and cash inflows originating from the project are the basis for allocation of funds. In this unit, we will cover what would be strategy of the organization in allocating capital, how corporates use option pricing theory as a tool for quantifying economies of scope of the project, what are the issues to be considered when an uneconomic project is to be abandoned. Then, we will evaluate different models of capital allocation. Thereafter, we will compare two different types of valuation, weighted average cost of capital (WACC) and adjusted present value (PV) approach. Let us look into the issues considered by corporates while allocating capital. The survival of the organization depends on long-term investments. Total value of the project should be considered along with cash flows that are directly attached to the project. The capital investments made in projects must be evaluated at defined strategic points of the project. Almost all investment projects will have certain number of options, like setting up new projects, expanding existing project, cancel or downsize ongoing project, or abandoning the project. The existence of the opportunity to invest may be considered as a case very similar to a call option in derivatives market, which by definition gives the right but not the obligation to a stream of cash flows associated with the project at some future date. Taking any of these decisions depends on a number of factors, which may include underlying economic variables such as the demand for the product, the level of interest rates, the health of the economy, the success of competitors, the political climate, etc. In this session, we learned on allocating capital in an organization, option pricing theory as a tool for quantifying economies of scope of the project, the issues to be considered when an uneconomic project is to be abandoned, different models of capital allocation, comparison between weighted average cost of capital approach and adjusted present value approach.